NASDAQ on pace for their largest monthly gain since July of 2022. Joining me now to discuss where there could still be some opportunity for investors, Jeff deGraaf of Renaissance Macro Research. Good to see you again. Somebody who's been pretty right, being bullish, but now what? We're about to put in an incredible month. Are we overbought, or where do we go?
Well, we are overbought, Scott. I know this business is forever. What have you done for me lately? So I do appreciate that. Look, there's seasonality in this tape. Well, I think one of the interesting things that we've done some work on is, how much does seasonality change if you've got, a particularly strong month like a month of November? Does that front end load and, force more of a mediocre or actually poor month in December? And that's actually not the case. Good things tend to happen. So I think you've set the bar and got this momentum machine going. We've got 91% of the S&P above their own 20-day moving average. That's historically pretty good news. It implies that we're probably going to go higher. So I think at this stage, you want to play it for the next probably 8 weeks or so, and then we'll see at the beginning of the year. Seasonal election years do tend to be flat the first half, so I could easily see us up around, call it 4,800 on the upside for the S&P, which is the old high, and then maybe go sideways for extended period of time as we kind of digest the potential for the election in 2024.
So you think calls for 5,000, or not that it's, percentage-wise much over 48 anyway, but, up to 5,500, for example, you think those are too optimistic?
I think they're very yield dependent. If you're going to tell me that yields can go to 4% and stay there, I don't think they're optimistic. I think if we first have to get through 434 on the 10-year yield to kind of punch through that support level. If we can't do that, then I do think 5,000 is optimistic. And I'll be the first one to say that our call is in jeopardy if we're really not able to punch through those the support levels on the 10-year yield. I think the good news around this, though, is what we're seeing out of the triple B spreads and the corporate credit markets is actually a continued contraction in that premium, and that's good news. So it doesn't say, or certainly suggests, that there's not a recession on the horizon, and that this slowdown is probably part of that soft landing scenario or narrative that a lot of people were having a hard time buying into, and I think has become more of the consensus now than not.
But your base case is 4,800 for 24?
Yeah, again, it's going to be yield dependent, but I do think that that's pretty easy, frankly. I think you're going to see the first half, I think, is going to be more challenging. I think we're going to have, the resistance levels in, call it February. I think we probably buy some time until the early part of the summer, and then I think we can start to move from there. But that's how I would see it. Again, yield dependent. But so far, I like what we're seeing out of yields. The real yields are high enough to suggest that we should get some contraction there, and that's how we're going to play it.
What looks to you like it's ready to break out? I mean, you could have a lot of false signals by virtue of the strength that we've had this month. I could give you small caps like we've been talking about for the entire program, which are up 10%. Now, I don't know to you if that means that they're poised for a breakout, that the chart looks so great. What do you say?
Well, that's one of the keys. There's two things that we're watching from a broad index level. One is the MSCI All World Index, that's ex-US, right? So basically everybody else other than the US. That's still a downtrend. It's probably more of a neutral trend at this point, but we'd like to see that breakout. It's above the 200-day moving average. That needs to get going. So I think we're still in good shape because that hasn't rolled over. I'd expect that to roll over first. The second is just go to the microcaps, right? Forget the Russell 2. Just go down to the microcaps, which is basically anything under $100 million. And that one, while it's still ascending, it is overbought, but again, with more of a momentum flare to it than not, there's a lot more work that needs to be done there to even change the trend, right? So I still think that sort of dark cloud is over this market. Some people call it the breadth divergence. That's still going to be with us. That's not necessarily that negative for the S&P, but certainly that has not changed its stripes as far as we're concerned. The one thing I think which is important here is that beta has been part of this leadership off the low, and that's an important component. It tends to have a seasonality to it, so that's not unusual to see it. You get the tax loss selling, you get a lot of that stuff happening here. It'll be, what do those names do in January? And if those can continue to outperform on a relative basis, that's going to be very good news for 2024. If they stall and they weaken, then I think we're in the same kind of environment, which is a pretty broad trading range that's going to be more challenging for 2024. So,
what about,
as we get into January, I think those two components are going to be very important to keep an eye on to determine what the remainder of the year is going to look like.
Yeah, forgive me, I didn't mean to cut you off. I was going to say, what about financials, which I'm looking at are green for the year, but only 3%. Of the sectors that are green year to date, they're the worst performing next to materials.
Well, look, you need banks. Historically, if you go back and look at the last Fed rate hike of every cycle, what needs to happen for a good outcome for equities, and banks need to start performing. They've had a decent move off the lows. Again, they look a lot like the microcaps. They haven't really changed their stripes. I think on the bank index, which we watch, needs to break out through 90 to really suggest that there's a trend change. But that remains a pretty big question mark in this tape, and I would fully agree with that assessment that you laid out there.
Jeff, I appreciate it. We'll see you soon. Jeff deGraaf.
Thank you.